What's up guys, Jake here. It's been a couple weeks since we did an update to my dead hand options trading challenge, so in this video, let's check in. And this is a really good time to check in because last week in the market we had 5 consecutive red days. That is the first time that has happened in 18 months. So the S&P 500 peaked on September 2nd and we had 5 consecutive red days. So people are asking me, Jake, are you on level 5 or 6 of your dead hand SPY call ladder? And no, I'm not. But before we get to my Fidelity accounts, I always like to check in with the other finance YouTubers and see what they're saying. So if you search market crash and filter by the last couple days, you're getting exactly what you would expect. Timing the next stock market crash, the 2022 recession is here, how to prepare for the crash. 47,000 views in 2 days, guys. It's just the same videos every time there's a red day in the market. The stock market will crash if this happens. 25,000 views in a day. The next stock market crash is here. How long will it happen? This is worse than a stock market crash. I don't know, guys. I feel like I'm doing the whole YouTube thing wrong. If I just made stupid thumbnails with that dumb O face, I mean, would I get 25,000 views in a couple days? Maybe I should just be making panic videos instead of videos on how to actually make money in the market. So let's go ahead and assess the damage of what 5 consecutive red days has done to the market. The market once again peaked on September 2nd, and over 5 days, the market is down 1.71%. I'm sorry guys, if you cannot handle a drop of 1.71% in your portfolio over a week, then active management is not for you. I highly recommend you sell all your stocks, put it all in a mutual fund, never look at it. But in the event you're watching my channel, then you're probably smarter than the average YouTube viewer, and you're not going to fall for that clickbait stuff of panic selling whenever the market goes down 1.71%. However, once again, 5 consecutive red days. This is an interesting test for my dead hand options trading challenge. In the event you have no clue what I'm talking about, check out this playlist. This is the 5th video in the series. You might want to watch them in order, but definitely watch the first 2 where I explain the strategy and then I set up my account. So currently in my Fidelity account, I have 91,518. I started this challenge on July 15th with 87,000. So in just under 2 months, I'm up 5.1% on my cost basis, which is pretty good. And this was after the 5 consecutive red days. So all this red right here, that was Friday. So I lost $1,500. But I lost $1,500 in value on Friday. And currently, let me just explain what's going on in the account. I don't have any outstanding covered calls because I already bought to close them for profits. I'm waiting for the market to snap back to reopen covered calls on my 200 shares of SPY. The level 1 call contracts for me are right here, quantity 2, they're down 32%. And my level 2 call contracts, there are 4 of them, they're only down 18%. So I didn't meet that 20% threshold to go to a level 3. So even though there were 5 consecutive red days, I never got to level 3 for my SPY call ladder. And overall, I feel like I'm doing very well with this challenge. When the market peaked on September 2nd, my account actually peaked on September 3rd, and I had a balance at the close of trading of $94,416, meaning in a little under 2 months, I was up, 7 weeks, I was up $7,400. So I'm averaging over $1,000 a week. I was up 8.5%. Yes, my account balance is now down to 91,000. However, as soon as we have a snapback, as soon as we have a green day, my 6 call contracts are going to probably gain back several $1,000s. My rate of return for my Fidelity account for the year is like 118%. I'm doing pretty well. In fact, I'm doing so well that I actually want to add money to my Fidelity account in order to buy more shares of SPY. To do this dead hand options strategy with State Street's SPY, I recommend having the capital in your account for about 100 shares. this gets you that 6 degrees of doubling down. So if you have about the money for 100 shares, level 1 is 1 call contract, double, 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 double. Because I started with 87,000, I had 200 shares of SPY. However, I really want to add about $20,000 or $30,000 to my account so I can purchase 300 shares. Then every month I'm selling three covered calls on SPY, and my level 1 for my SPY call ladder is actually 3 call contracts now. So anytime there's a green day in the markets, I can capitalize with 3. If I made 7,400 in a month and a half with 2 call contracts being my level 1, then if I had started with 3, this would have been $11,000 in a month and a half if I had started with 300 shares. So yeah, I don't feel like I've proven this strategy works yet long term, but in the short term, I'm having a lot of fun. Before showing you my profit and loss on all my trades, I just want to mention that my margin bill for the month of August was only $4. I know whenever I go negative in my accounts, this really freaks people out because they don't like margin, but it's a very small amount if you're only holding these negative positions for a couple days. Now, here are all my trades. On the right, these are the covered calls that I've sold to open and then bought to close. And then these are all of my SPY call ladder trades. So whenever you see a quantity of 2, that's level 1. Whenever you see a quantity of 4, that's a level 2. So I've only made it to level 2 on my SPY call ladder 3 times in the last month and a half. So I'm waiting for some more volatility, some bigger drops to see what exactly this dead hand option strategy can do. But it's going exactly how I thought it would go and was hoping. Anytime the market is slightly green while I have 2 outstanding call contracts, I'm trying to make between $50 and $100 a day. So, because I always sell to close and then reopen with a higher strike. So on, for example, August 6th, I made $55, $89, $101, $51, $109, $101, $81. It's going exactly as I want it to do. Every day the market is open, I want to be making between $50 and $100. But once again, if I had 300 shares, then I'd be hoping to make between 75 and 150. But anytime there's drops or huge spikes up, we get these wild swings, then I can start making some serious profit here. So when I closed this level 2 after the market snapped back on August 23rd, I made $682 on my level 2 call contracts. This was a very green day where I made $637, and that was just from 2 call contracts, and I don't know, the market must have gone up over 1% that day. Now, if you watched my last video, you'll know that I sort of amended my rule when I'm allowed to double up after level 1. I had this period where my level 1 was slightly negative, but it never got to be, the value of the call contract never lost 20%, allowing me to double up. So for just level 1, I amended this rule where if the value of the call contracts loses 10%, then I'm allowed to go to level 2. However, I'm going to be conservative here and say that I definitely need to lose 20% before I can double up, double up, double up, and then once all my positions combined can allow me to sell to close them all for a net profit, I will happily do so. And if you see in my account, I was watching it on Friday, the market was red, probably a little over 0.5% by the end of the day. However, the value of my level 2s are only at negative 18%. I never got to greater than 20% to justify doubling up. However, as soon as my level 1 was negative 10%, then I went to my level 2. If the market is red on Monday, you better believe I'm going to level 3 and I'm buying 8 call contracts. And I'm committed to this, guys. If it goes red again, I'll buy 16 the next day. Red again, I'll buy 32. Red again, I will buy 64. I am committed to doing this. Now, what is the worst case scenario? The worst case scenario is the market drifts down consecutive days by a lot and then stays perfectly flat. Has this ever happened? No. I've investigated the 2008 recession, the 2000 recession, the 2016 crash before the election, the 2011 crash when basically they wouldn't raise the debt ceiling and it lowered America's credit rating. And I think that my SPY call ladder would have survived all of those because you got to factor in this 20% drop. If the market is just slightly red, like it's been doing the last week, it's a neutral day. I don't exit my positions and I don't add another level. You basically just ignore like the day never happens, and it's sailing pretty smooth here. But let's just be honest with ourselves and admit that the last 18 months has not been normal. There are lots of people who have only been actively picking stocks or trading options since the March 2020 collapse. And yeah, I mean, there's one explanation for why the market has done this. And one, you could say this was an overreaction to selling, but two, it's the Federal Reserve. The Federal Reserve lowering interest rates and quantitative easing by buying U.S. Treasuries. This is not going to continue. Sometime in the next couple months, the Fed is going to announce they're going to taper. They're going to stop buying U.S. Treasuries. This will contract the money supply or stop it from expanding so much. And the traditional valuation of stocks is going to have to normalize. I hope there's not a 20-30% correction, but it's entirely possible. But even from the top, if we were to lose 20%, so, you know, if SPY is 445, we need to lose 80 points. If we lose 80 points, it goes back to here. It goes back to like 360 yeah, 360. You know, even if a SPY is at 360, we're still way ahead of the game, guys. Like, the market has inflated so much that even with a huge correction, if you were just buying and holding long-term anyways, you're still way ahead of where you would have been had the Fed not stepped in and pumped up the market. I definitely think things are going to get interesting over the next couple months, but I promise not to panic you guys, not to feed you complete BS in order to get more clicks with those dumb O faces. I just can't take it, guys. Okay guys, if you enjoyed this video, give me a thumbs up so the algorithm knows it's good. In addition, check out that playlist for the Dead Hand Options Trading Challenge down below. Till the next update video, take care.